why you see gold, which they tried to hit right after the announcement, but here it is right back up to $2,600 an ounce, silver back to 31, the way that they are when stocks are trading at or near all-time highs. And at the same time, we have our deficit out of control, creating 100,000 in debt a second, every second, 24/7, $1 trillion every 3 months, which took 200 years to do the first time. We do it now in 3 months. We've redlined our national debt, and it's 35 trillion, which doesn't even take into account unfunded liabilities of Medicare and Medicaid and Social Security and government military pensions, all that kind of stuff. At the same time, the Fed is making these mandates based upon fake macroeconomic data, like the CPI or like the jobs number.
Gold has bounced back to $2,600 per ounce and silver to $31, despite efforts to push prices down after an announcement. Meanwhile, stock markets are near all-time highs, but the U.S. deficit is spiraling, with $100,000 of debt accumulating every second, leading to a $1 trillion increase every 3 months, a rate that previously took 200 years to reach. The U.S. national debt continues to escalate at an alarming rate. In the past 3 months, the debt grew by $684 billion, pushing the total to over $35 trillion, not including unfunded liabilities. This rapid increase in debt highlights ongoing concerns about the government's fiscal health. The renowned speaker, the president and CEO of Miles Franklin, Andy Schectman, exposes the 3-month moving average of unemployment rising by 50 basis points from its low signals a recession, which has been accurate for 9 straight recessions. Now it's up 53 basis points. There's also suspicion that political motives may be influencing these moves, with concerns about rate changes happening before elections. The latest news from the Federal Reserve in September 2024 reveals a notable rate cut of 50 basis points, marking the first cut in 4 years. This move comes as inflation has slowed to 2.5%, down from its peak of 9.1% in 2022. Despite public announcements of rate cuts, it's suggested by Andy that the government has been quietly lowering rates by buying bonds since June. This leads to rising asset prices, including stocks and real estate, while ordinary people struggle with increasing costs for essentials like food, rent, and insurance. However, Andy thinks official data misrepresents reality, with claims of falling health insurance costs, despite the public facing growing financial pressures. Easy money policies are criticized as the wrong approach, benefiting the rich while leaving the majority worse off. We will present clips from Andy's interview, but before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
The 3-month moving average of unemployment, if it goes up 50 basis points from its low point, you're in a recession, and that's predicted 9 straight recessions in a row with a 100% success rate. Well, guess what? We're up 53 basis points. So whether it be the uninverting of the yield curve, whether it be the SAM rule, or whether it be then raising rates, because most of what they're doing are lagging indicators. They're reacting to lagging indicators. Yeah, things are about to get dirty. You could see the market collapse. You could see a resumption of a fairly decent recession. The political side of it is even more gross. Like, there's a meeting in November right after the election. They could wait until right after the election to do this. Why are they doing it now with a month and a half to go before the election? Is it political? It sure kind of stinks that way to me. So any way you look at it, it's not a good thing. It's not a good thing at all. In fact, I would argue it's the worst thing that we could do. And look, arguably they've been doing this since June. They just haven't talked about it because we've seen rates fall since June. How is it that the mortgage rates are the lowest they've been in like 2 years and they just started lowering rates? It's because they've been under the table buying bonds, creating money to buy bonds under the table. But looking at Trump and Kamala, neither of them want to fix it. They both want lower rates. They both want a weaker currency. And these lower